Hey everybody, Ben Nelson, the everyday real estate investor here. I am excited to come to you with another episode of the podcast here because I have an awesome guest today. Today we're going to be talking to Kevin Bupp, CEO of Sunrise Capital Investors. We're going to talk about some of the things that he's investing in and his story and his journey. So Kevin, appreciate you being here on the show.
Oh, Ben, thanks for having me. Excited to be here.
Awesome. Well, I always start with kind of, everybody's gone on a journey in their real estate investing. So give us a little bit of context, some background on how you got into real estate in the first place and what gave you that real estate bug and what are some of the experiences you had kind of just getting into the game?
Yeah, great question. And so I'm 44 now. I got introduced to real estate when I was 19, and I bought my first property when I was 20. And so I've been at this now for over 2 decades. I always joke and say that real estate kind of found me. I didn't find it, and so I'm very grateful that it tracked me down at that early age. But really, it came by means of a mentor. A gentleman that became my mentor. It just happened. I met him through a girl I was dating at the time. He was a local real estate investor, about double my age. So I'd been at it for a number of years, and we grew a friendship outside of real estate. Just he was a pretty cool guy, and we hung out a little bit, learned what he did, which was very different than what my parents did growing up. My parents had the typical 9 to 5, good hardworking, dual working household, and long story short, after getting an understanding of what his name was David, what he did, again, just to open my eyes up to, outside the box options, things that I didn't really think were in my future. And his lifestyle was very different. He had a lot of flexibility, drove different vehicles than my parents drove, lived in a very different type of house, this, that, and the other, right? And
Mm-hmm.
he invited me to a real estate event back when I, probably within the first few months of meeting him. It was a 3-day event that his business partner was supposed to go to. He couldn't, so he invited me to come. It was already paid for, and I went, and that was it. Like that was the catalyst. That was what really opened my eyes up to the opportunities, more so to meeting other people that were doing really big things. In my eyes, they were huge things, and it could have just been wholesaling a house and making a $10,000 wholesale fee. Like that was huge to me. Do that a couple times a year. Like that was
Right,
just it
right.
was just outside my realm of thinking. And so that was the start of it. That was really the jump off point. But I didn't buy anything when I came back. At that point, I was literally going to school, local community college. I was tending bar in the evenings, making my way. And I would basically just try to be around David as much as possible between those times. And I finally, after a couple of weeks after we got back from the seminar, I knew that if I didn't figure out a way to really get my fingers into this real estate thing, if I didn't get my arms around it, that I'd lose interest as it dwindled away, and I would just shove it under the rock and never come back to revisit it. And so I kind of went out on a limb. I just asked David if I could come work for him for free, whatever it was. He was a solopreneur, so he didn't have a team really. He had some contractors he worked with and a few other resources that he relied upon, but like he was very much a solopreneur, kind of running the day to day of what he did and dealing with tenants directly and things like that. And so I saw him struggle with technology, and I knew that was an area that could probably help him out a little bit. And so I basically just, again, I put myself out there and asked if I could work for him for free, and whatever he needed, whatever I could add value, whatever he needed, I would be there in between, school time and working at the bar in the evening. So I'd work late, wake up really early in the morning, go spend some hours with him, go to class, come back after class, go to work in the evening. And I did that for over a year. And I did it long enough to where I got an understanding of his business model, why he did what he did, and just decided not to reinvent the wheel. And I bought my first property at the age of 20 and leveraged some of the resources that he had introduced me to, one being a private lender. So I used all the money I saved up bartending, bought that first property, got some debt put in place by this private lender. They helped fund the rehab cost. And there we have it. That was at the age of 20. Although very quickly, Ben, I realized that his business model was basically buy and hold. Like that's what he did. He was a buy hold investor, owned a lot of single family and small multifamily, but he did some, not over the top renovations, made them nice, made them kind of renter proof, and then he would just hold them for the long term. Well, I realized that measly couple $100 a month of cash flow after I rented out this unit I had renovated, it was going to take me a very long time to save enough money again to actually be able to, buy that next property and just keep everything. And so I just, at that time, I morphed it to, buy, flip two, buy one, keep it, flip two or three, buy one, keep it. And I
Hmm.
did that for a number of years, and was able to build up quite a significant portfolio of single family properties in my early to mid 20s, and then transitioned at some point in my mid 20s over to commercial real estate, just looking at the bigger picture. Are there some bigger opportunities out there? And anyway, just I'll stop there because I'll tend to ramble for another 10 minutes if you let me. And so I've done a little
No
bit of
problem.
everything.
No.
I've owned hundreds of single family properties. I've owned multifamily, office, retail, self storage, medical office. We own parking now, mobile home parks, what have you. So I've done a lot of everything over the 20 years, but I'll stop there for any clarifying questions.
Yeah, no, that's great. I appreciate the background, and I think there's several things in there that are really key that I just kind of want to. They may seem obvious, but they're to me they're key points in finding success, and that is number one, recognizing something that's an opportunity. Hey, this person is doing something different, right? That I haven't really seen before, but look at what they're doing, and they're successful. How do I tap into that? Number two, making sure you're basically finding a way to hold yourself accountable, right? Like, hey, if I don't put myself in a position where I'm going to be around this, I'm just going to like put it on the bookshelf and it's going to gather dust, right? And then number three, offering value, right? So,
Yep.
you try to find a mentor and you go, hey, I want to take, I want to learn, and you just come in as a taker. Um, people are willing to share that are successful, but they want you to bring something to the table, right? Because
Yep.
they're busy, right? They've got lots of things going on, and so you're coming from this, hey, how do I bring value to this person where I can glean from their experience, but I'm actually leading with value versus leading
Mhm.
with like I'm just going to take information and go use it for my own. So
Correct.
I think those are just like key to me. Those are key components of success overall. Are those types of things and that kind of mindset and attitude. So I just kind of I didn't want to brush over those without kind of pointing those out. So
No, I think it's
um,
an important note. I mean, I tell you that I say again, just if I'm speaking to anyone that's listening out there that's maybe just getting started and maybe haven't done their first deal yet, they're kind of in the exploratory phase of their journey, learning about the different ways to make money investing in real estate. I get a lot of inquiries, folks just reaching out like, can I pick your brain? Can I pick your brain? It gets asked so many times. And I love to help. Don't get me wrong. Like I love to help others. I love to, through the podcast, through conversations, through different networking events. I love to get back, but there's only so many hours in the day, right? And
right, yeah,
I think that the word of advice for those individuals that are getting started that want to glean some expertise from someone else that's already been there and done it, because that's who we want to learn from, right? We want to learn from someone that's been there and done that. They've been through the ups and downs. Figure out how you can add value to them in their business. That's it. Like, lead with value. Like, first and foremost, lead with value. Don't take right from the gate. Don't have that give me a mentality. Have the let me help you. Let me add value to you in your business and help you grow. And then hopefully in return you'll help me on my journey. So just
yep, absolutely,
I think it's a
yeah, and
simple
I
mistake a lot of
think
people make.
yeah, absolutely, yeah, and I think I mean, and again, it depends on who you're talking. But I've even heard I can't remember who said it, but it's like it's so true. You offer, hey, I'll take you to buy you coffee. I'll buy you lunch. Well, that's great, but is is it a $20 lunch? Is that a fair exchange? I mean, I don't know.
Yeah,
I mean, like, especially what are you getting in return for a $20
that's right.
lunch? So you got to weigh that out. What is the exchange fair for what you're asking them to provide to you? And
$20 lunch and
um,
an hour of time, probably, right?
right. And so your hour of time is probably worth more than $20, right? So
Yeah, yeah.
with everything you're doing. So well, let's get into that. So we talked about how you started. Like a lot of people kind of just got introduced to it, started with some, kind of basic concepts of investing, some flips, some buy and holds, maybe some, I don't remember if you mentioned wholesaling, but that's where a lot of people start also.
Hmm.
So, um, and then took that and expounded on it and wanted to scale basically to something that was a little bit bigger. So commercial and all of those things, and led to what you're doing now, which is mainly mobile home parks.
Hmm.
And you said parking garages and things like that, which is great. I've
That's
actually
correct.
not talked to someone that does that, so that's awesome. So talk about maybe just pick one, and then we can go into the other because there's probably some differences, right? So what brought you to looking at, I guess, both of those opportunities, and why those? And then what are you currently doing with those today?
Yeah, I've always considered myself an opportunist. I like to maybe seek out you know, opportunities where maybe others aren't looking, kind of going against the herd. And, uh, you know, any of the things I've ever invested in, I never went out seeking them. Most of the time, it's been introduced to me by someone, someone that's already been there and done that. They've spoke, to the merits of whatever asset class it was, and the same thing happened with mobile home parks. Honestly, mobile home parks, when I got introduced to it back in 2011, was actually an asset class that I had never considered. Up until that time, I'd owned again hundreds of single family properties, multifamily, some other miscellaneous commercial real estate, some industrial, and some office and some retail. But I'd never ever considered mobile home parks, and I didn't know anyone that actually owned any mobile home parks. But as these things typically happen, I was introduced to a gentleman by the name of Randy. Randy had been a commercial banker for his 30-year career. And my buddy was like, "You need to meet this guy, Randy. He's like a retired banker. He's just a cool guy. Like he lives 30 minutes away from you. You guys should meet for lunch. He's just a wealth of knowledge, and I think you guys would get along." Like that was it. So he made the introduction. Me and Randy had lunch, and I literally didn't know anything about Randy other than that he was a retired commercial banker and had worked at a number of different large names in the Tampa Bay area. But what I learned within the first I guess 30 minutes of talking with Randy after we kind of exchanged some pleasantries of like, who are you? What do you do? What do I do? This, that, and the other. He retired from banking and ended up buying 3 mobile home parks here in Central Florida. And, he basically went on to say that throughout his bank, at least in the latter half of his banking career, he had a number of clients that owned mobile home and RV parks in Florida, and he had lent on a number of them. And so he got to actually get a better understanding of the business itself, understand the financials, how these things live and breathe, and how profitable they are. And he's like, well, heck, I know what I'm doing when I retire. I'm going to take my retirement funds and I'm going to go buy a couple of these, and these are going to be my retirement. And that's exactly what he did. So I'd met him, I think, about 2 years after he had purchased those 3 assets. And I was so intrigued, just of all the things that he was telling me about my home parks. I was like, gosh, I had to plan at that point in time to go scale multifamily, and we skipped a part of my history. In 2008, I lost pretty much everything. So there was from 2008 to 2011, I was going through damage control. I truly lost everything, even my personal residence went to foreclosure. I mean, it was a pretty dark and rough time for a number of years, and so
yeah.
I came in 2011. It was kind of how the heck do I rebuild this? And I was on an exploratory journey to figure out what is the most efficient way to rebuild this, but not do it one by one house at a time. And there's nothing wrong with that, but I needed to figure out I felt that pain, knew what that was like, but how do I do this in a more substantive manner and figure out a better path forward, at least for me. And went on meeting people, and I met Randy, and he had mobile home parks, and he intrigued me enough during this period of time. And he also, made a lot of comments, derogatory comments towards multifamily, as far as like, here's why mobile home parks are better than multifamily, right? And he, went on that the resident base is very sticky. They don't, when they own their home, that land, like they stay for, sometimes decades, right? The maintenance and overall day to day is a lot less in a mobile home park because you're not dealing with ACs that break or roofs that leak because the residents own the homes for the most part, not all the time, but for the most part. So that intrigued me enough during this conversation with him. This 2-hour lunch it turned into that I was like, I think this is something. There was no good information out there that I could research. There was like one forum on mobile home park investing. And so I was like, I'm going to figure this out. And within the next 12 months, I'm going to buy a mobile home park. And remember, I had not bought any other real estate in 3 years. I pretty much had bad credit at that point in time, but I need to figure out a way to rebuild. And so I gave myself a year to figure it out. It took me about 14 months to actually buy that first mobile home park, bought it in Atlanta. And this was back in 2012 and literally owned it up until like a year and a half ago. And that was the start of it. I bought that first one. It went well, better than planned. Bought the second, bought the third, bought the fourth. But I think 8 or 9 until I ran out of either. I didn't have much money, but friends, family, immediate relationships that I had. I'd proven the business model over a number of years, and ultimately at that point realized that I had something special. I understood the business really well, had a great amount of deal flow, and I needed capital. And so that's when we, formally launched Sunrise Capital Investors back in late 16, early 17, and have since went on to buy, over $220 million of mobile home park assets, and continue to buy today. So it's been a fun road. It's been a very just not just fun, but lucrative journey for not just us, but all of our partners involved. And it's been a great asset class. So the secret's out now, unfortunately, but it
Yeah,
was
I
a
was
little bit
going
more
to
of a,
touch on that a little.
yeah,
Yeah,
the
yeah,
cat's out of the
absolutely.
bag, but
Yeah, yeah. Well, it's so a couple. I also wanted. So I didn't realize that, and I apologize for not bringing that up. But I think it was a good segue into that. You know, 2008, right? We had a lot of people had that situation that were doing really well
yeah,
in investing, and then the market just totally fell out. The bottom fell out from it, and a lot of people lost everything. So, but taking that and kind of like that, it sounds like that was kind of the pivot point to you getting into mobile home parks. And had it not
it
been
was.
for that, you may still just be doing the single family home gig, right? Because it was working for you.
Yeah.
So it's just interesting to me when I hear like, so because you take something that was like you could label as a bad situation, right? I'm sure it was very uncomfortable going through that.
Hmm.
But you saw it through the other side, number one, and number two, actually better opportunity came out of it. So I just
That's
think
right.
that's, I mean, you got, when you're going through those rough patches, whether it's an economic thing, whether it's a personal thing, there's another side to that. You just got to keep pushing. You got to figure out and problem solve and look for those opportunities.
I
And
truly
sometimes
feel
those
there's
things make
a,
you look for those opportunities.
yeah, I feel like there's always a silver lining, and whatever whenever we're having bad moments or bad days, what have you, or bad things happen to us, I feel like there's always, if we can, kind of lift ourselves above that, and there's always something positive that can come out of it, or a positive lesson that's learned from it. And so it's hard.
Mm-hmm.
It's very difficult when when you're dealing with it on that given time frame. But like normally, I agree with you. I think that it took me a couple of years to realize that. But yeah, something positive did come out of that. 'Cause, again, the trajectory of time would have been changed if I wouldn't have gone through that financial distress in 2008. So, and who knows
Yep.
what path I would have chosen, if any different one.
Yeah, exactly. So, but here you are now. So, now the other thing you just mentioned was about the cat being out of the bag, right? So, I think when you got started, we were kind of starting to like it was just kind of being found, so to speak, right?
Yep.
There's been these people that have known about uh, this niche of real estate for 40, 50 years because they own them, right? And they've owned them for that long, and they've been able to keep it kind of that secret, right? But people have found this avenue of creating cash flow in mobile home parks, and so it's become a lot more uh, popular asset class over the last 5, 6, 8 or 10 years, right? So talk about how if you've had to make any change it, and not only that, the market in general has changed too. So we'll touch
Hmm.
on that too. But um, what have you had to do in your business if to pivot to kind of make sure you're still competitive, and what have been like maybe some of the negatives or and maybe the positives of that being the case where these are more popular now than they have been.
Yeah, yeah. So I mean, yeah, the likes of Carlyle Group, Blackstone, big institutional hedge funds, started buying in the space, 5 6 years ago, and they haven't slowed down. They've been, really trying to pour billions of dollars into a space that has a supply demand imbalance. I mean, there's no new supply coming in the market, and so you're watching a consolidation occur, right before our eyes. It's happening very quickly,
Mm-hmm.
and so while there's pros and cons to big groups like that coming into the equation, prior to big groups like that coming into the equation, it was just a lot of smaller investment groups. A lot of mobile home parks were owned by an owner that had just one. It was a very fragmented industry. Um, you know, they cash flow great, a lot of opportunity, but not a great opportunity on the exit side to sell at a compressed cap rate or sell to a professional investor. You're just basically selling to another mom and pop. And so, the pro of these different groups coming into the equation is like they look to buy at scale, and if you have a portfolio to sell to a group like that, they will pay a premium for it, probably double than that of what a typical mom and pop might have paid 7, 8, 9, 10 years prior. So that's one benefit. But the flip side of that is, again, that's competition. Their cost of capital is traditionally cheaper than that of the capital sources that we have, and so they can be a lot more aggressive with what they're willing to pay for for the same asset, and so that poses challenges on the front side. But if you can find them, which you can, I would tell you that a lot of these institutional groups, they don't like fixing problems. They like buying stabilized assets, and they like buying portfolios of stabilized assets. They don't want to go in and have to fix everything. They don't want to buy a single 80 space mobile home park. I'm not saying they won't, but typically they don't want to buy problems. They want to buy a stabilized performing asset that they can dump $250 million into at one fell swoop, right? Like, and there's smaller groups out there that will take smaller chunks, but generally speaking, they're not competitive in that manner. Like, very rarely am I going up against them on a $5 million mobile home park that we're buying. Very rarely, but there are a lot of other buyers out there outside the institutional group. So, like, there's just a lot of people
Sure,
in the
sure.
space now. And I always like to make the joke, back when we started buying them, I got to know kind of good old boys in the industry, and it was kind of like, if you knew, you knew, and if you didn't, you didn't. Like, don't talk to it about don't talk about the merits of mobile home parks to anybody. Like, it was kind of like, shh, these things are great. Let's not let the
Yeah.
cat out of the bag. Anyway, the cat got out of the bag. And so, how we've been able to pivot, or not even pivot, but just how we've been able to continue to operate and buy assets, buy quality assets is, we've years ago when I was buying single family, I got really good at going off market direct owner. Like, that's just, it became my forte. I got really good at the marketing side of things, at databasing different markets, not just markets, but also very specific assets that I would like to buy. And I would just literally, pound away at them with direct mail, with cold calls. And I would document conversations that I've had, and I'd follow up. We'd have different methods of follow up, and I found that had a very solid conversion rate for me to be able to buy. And so I've always carried that over to any different types of real estate I've bought, and whether it be, again, residential, commercial, whether it be self storage, this, that, and the other. And the same thing applies to mobile home parks. So over the last 10+ years that we've been buying parks, we've had an entire team behind the scenes that have basically not just databased the specific markets and parks that we would like to own based on size, the market that it's in, quality of park, this, that, and the other, but also keep that list updated, because obviously transactions happen. But we literally have a team that nonstop, just like maybe a good brokerage firm does, that literally just calls on park owners. I've got parks. We bought a park at the end of last year that my first conversation with that guy was 8 years ago. And I've just continually, and he owned it for 44 years, his family. And we ended up buying it, never made it to market. And we negotiated phenomenal terms on it. We built somewhat of a quasi relationship over those years. And he wanted to sell it to someone he liked. He wanted to get the price for it as well, but, we didn't have a competitive environment. And so 90%
Hmm.
of what we bought, both mobile home parks and parking, over the last 10 years have been off market direct to owner. And so that's how we've been able to, um, you know, stay relevant and still be able to buy with a margin of safety. We always like to buy assets with a buffer in there, and have some type of margin or safety. Because at the end of the day, one thing that I think we can all agree upon is that we all see pro formas. And I can promise you one thing is that property is it's either never going to meet that pro forma. It's either going to exceed it or it's going to fall short of it. But it's surely as hell never going to be exactly what was set forth in that pro forma. And so we want that margin of safety in there in the event skeletons come out, you learn some things about it, doesn't perform as expected, that we still have a buffer in there. And so it's hard to do that when you're buying on market retail, when there's other buyers involved. Like, you basically are paying over market a lot of times in order to actually buy an asset. And
Yeah.
so we try to
Yep.
stay out of that world at all possible.
Yeah, and there's another couple great points in there. This is still a relationship business, right? For the
Absolutely.
most part, and whether it's a listing or not, the listing agent probably has some sort of relationship with the seller, and what? So that's why don't you go build that relationship? It's a lot more work than just browsing
Hmm.
through listing. You have to have that consistency, and you're not going to call a park owner one time and be like, hey, you know I'd love to chat with you about your property. Um, you know, you maybe, if you're super lucky, but for the most part, it's going to take building that relationship over time and being consistent, and you're not going to hit that person like right when they're thinking about selling, more likely than not, right?
That's
So
right.
the consistency, building that relationship, and like you mentioned, this person owned the one you mentioned owned it for 40 something years. That it is about the money, but it's also about that. I mean, that's their baby, right?
That
They
is.
probably most
they send their
owners
kids.
want,
They send their kids through school, their grandchildren through school, right? Like
yeah.
university and all that. And that was their family's income. Their kids grew up in the park. The kids help, and it's a really this park I'm speaking to. It's a really nice high end park, and so they got to know the residents in there. I mean, they saw residents come and go over the years. I mean, it's just
Hmm.
it was intertwined into their being by that point in
Yeah,
time. It was a
exactly.
part of
And so
their
I think
life.
yeah, and I think it's important for a lot of owners to know that their assets going to be continue to be managed well, and that they know who they're handing it off to, right? So that relationship is super important. And I don't think that's ever going to go away. I mean, everybody, you mentioned Blackstone, and yes, there's a place for some of these big, hedge funds and things like that. There always will be, but um, you know, and you hear it in the brokerage industry as well too, like all these different things. Oh, brokers' jobs are going to be taken away. I don't see it. I just don't see it because I think there's always that relationship aspect, and yeah, maybe
Hmm.
certain aspects of the job, or maybe if you're just lazy and not doing what you're supposed to be doing as a broker or as someone doing what you're doing, then yeah, maybe you have something to worry about. But relationships are always going to be key, no matter
I
what
agree.
technology and all of that stuff is out there, and no matter how many big buyers are out there. There's always opportunity. But again, like, and then flip side of that is there's potentially opportunity on the back end for that, right? You go out there, do the things that those big hedge funds aren't doing, these other big investors, find an opportunity that they're not going to be interested in, turn it into an opportunity that they're going to be
Hmm.
interested in, and now you can make money because they're looking at it from a different set of glasses, right? They
That's
want
right.
that stabilized asset. They're willing to pay a lower cap rate for it. That's how you create value that you can sell to one of those bigger buyers.
That's right. Exactly.
Yep. Awesome. Well, we didn't talk about. Let's touch really quick. Not. I don't want to spend a ton of time on it, but I am curious about the parking garage thing and how you got into that, and then and just some kind of basics of what that looks like alongside the mobile home park investing.
Sure. Yeah. No, that's a great topic to talk to. And again, as I'd mentioned earlier, I'm an opportunist. I love keeping my eyes open. I don't chase shiny objects, but I do keep my eyes and ears open for what I feel are opportunities that the crowd isn't running to at this point in time that could be that way, and maybe 5-10 years they're out. And so I was again, as these things go, I love on my podcast. I've been doing it for 10 years now. I love every once in a while bringing on some like real niche type topics. For example, I did a whole series probably 6 years ago, 7 years ago, before car washes were like crazy like they are now. I literally interviewed, I forget how many different car wash owners, operators. I even there's a car wash outfit based in the southeast. I think it's Autobell or something like that. It was the largest in the country up until a few years ago. But anyway, I interviewed tons. That was intriguing to me, like car wash operators. I interviewed like a ton of like laundromat operators, like just exciting,
Mm-hmm.
really niche stuff, right? And so one of those niche interviews was a parking lot broker. He was one of only 3 brokers in the entire United States that specialized only in selling parking assets, and he also owned a number of parking assets as well. That was intriguing. I had him on the show, and it was one of those things where I didn't know anything about the niche. I couldn't even do much research on it because there wasn't much information out there.
Mm-hmm.
I didn't know
Yeah.
anybody that owned a parking lot investment. And I was so intrigued after I hung up the phone with him after we stopped the interview that it never escaped my mind. And my partner and I ended up attending a few different parking lot or parking conferences. There's a few national conferences that go off each and every year to support that industry, and did that for a number of years, just really exploring the space more, just getting a better understanding of the business model, where the opportunity lies, and probably spent about 2.5-3 years doing that before we bought our first parking asset. And really what we realized that it was a very fragmented industry, very similar to that of what mobile home parks were 10 plus years ago. Lots of mom and pop owners, lots of those owners that are lacking technology and are basically missing a lot of revenue opportunity by not implementing technology, not implementing dynamic pricing on lots or garages that they own for events and other types of events like that. And so, we dug a little deeper and bought that first parking lot. We bought a lot up in Wilmington, North Carolina, in downtown, a small little surface lot. right on a hard signalized intersection. It had been run by basically a mom and pop local real estate investor. Had his son running it. Had no technology. It didn't accept credit cards. While all the other private lots in the area
Oh
accepted credit
man.
cards, this one didn't. It was 2 blocks from historic waterfront downtown, right in the restaurant row. But this, the son would take, of cash, and I don't even carry cash on me half the time. So I would have missed the parking opportunity. I wouldn't have parked, I would have gone around the corner, park somewhere else. And so anyway, we realized that there was a ton of upside just by implementing a credit card machine. They're simply putting a credit card machine in place, also instituting dynamic pricing, changing the pricing of parking when events were present, when concerts were going on or events downtown there. And also lowering the pricing when it was slow time, right? Like just having the ability to actually change it on
Mm-hmm.
the fly. And also having parking enforcement, just put some lights in, things like that, make it safer for people. And we bought that asset. The NOI, the trailing 12 months was, I think, $38,000. And we, we paid $695, but before we closed on it, we arranged a triple net lease in place with a local operator, a very prominent operator that knew their business well. For I'm drawing a blank. I think it was $71,000. A triple net lease for a 5-year triple net lease, $71,000. So right there, we bought it basically at a unleveraged 10 cap, and I've gotten to know this operator that runs it now. He's a good friend of mine. He runs a pretty large parking operation, and he's given me some insights as to what that lot actually does with their enforcement, with their professional operations. And the following calendar year, this is 2022. That lot did a gross revenue of, I think it was 139, give or take, $1,000. It's a tiny little lot. So anyway, just
Wow.
$38,000 from when we bought it. Yeah, from what it was mom and pop to, 100, basically $100,000 more, just by
Wow. That's
instituting some professional.
incredible.
And then that might be an extreme value or extreme example to use. I'm not going to say it's going to happen all the time, but we've done it time and time again. We bought an asset from the city here in our backyard, city of Clearwater. It's down Clearwater Beach. It was a city-owned garage. It had only been built 5 or 6 years ago. Cities are just bad business people. I mean, the price what it cost them to build that to what they were charging for parking. The average parking on the beach was, on non-busy times, was $5 an hour, and on busy times sometimes it was $40, like flat fee, $40 or $50 flat fee. And they built this beautiful parking garage, and they were charging $2 an hour, and they were losing money every single year for every year that they owned it. And we took it over; it was only $3 an hour and no dynamic pricing. We immediately changed that, instituted dynamic pricing, flat rate pricing for very busy weekends when the garage fills up, and that we 5x'd the revenue on the garage simply by
Wow.
just changing the pricing model. It had nothing to do with like traffic. I mean, like literally the thing was busy. It was busy in and out, but people, even locals that live there, they would just park there, keep their car there all the time. Because they also, it's two
Right.
dollars an
Yeah.
hour, and they had like a maximum rate of like, it was some ridiculous amount, so like $12 a day or something like that. So people just be like, I'm not gonna I'm just gonna leave my car there for the next 2 weeks. I'm not gonna move it.
Right. Yeah.
So
Wow, that's pretty awesome. I've never even okay, I can't say never because as an entrepreneur, you always see something and it's like, "Oh yeah, that's probably I mean, someone's making money on that." So, it's kind of that whole you mentioned not chasing the shiny object. Just as an entrepreneur, you have to be careful of that, right? But so I can't say I never thought about it, but I haven't put a lot of effort into it. That's a really interesting little niche there that obviously can
it's just
do very
the whole
well.
idea is just like we do. We find things that are mismanaged, right? Find things that are in great locations, great markets that are essentially being run inefficiently. And we get that's
Yep.
how we make money, right? In real estate, we make money by solving problems.
Yep.
Identify the problem, understand how to identify the problem, and then how what the solution is, and execute the business plan. And there you have it. And that applies to what doesn't mean that parking lots are better than any other asset class. I mean, you can execute that same business model in every different
Sure.
types of real estate, right? Identify the
Yep.
problem, understand what the solution is, and how to execute on it, and there you have it. It's the $1 million
Yep,
idea.
yep, exactly. Yeah, know your niche, right? Know what you need to do and how do you take this from, not producing like it could be and maximize it. And every niche has its own um, way of doing that. And so it's really what it is. You just
Yep.
learn your niche and figure out the ways to add that value, and um, go out and find those opportunities. And you're
That's
going to be
right.
able to find them a lot easier if you know how to underwrite those things and what the opportunities are. So awesome. Thanks for touching on that. I'm super intrigued by that myself. That's seems like an awesome opportunity that I don't. It's not sexy, right? It's not sexy. It's
Yeah.
not like owning a big, really cool looking apartment building or something like that. Which a lot of those don't cash flow super well anyway, right? Because they're, those A buildings and things like that. They don't cash flow as much. But
Yep.
sometimes the ugly duckling is the one that produces a little bit more opportunity in
The,
that sense.
the great thing about parking, I'll leave this one last point for folks to kind of think about is, like, at least as it relates to like a surface parking lot in a desirable location, it will never have a lesser value than what it does today as a asphalt or gravel parking lot. It never will. It will only have a higher value whenever that land becomes more valuable because it's got redevelopment opportunities. And
Yeah,
so if you can buy it today and have the numbers make sense, as a cash flowing covered land play in a growing area, in an area where parking is diminishing as well. Because now what's happened is a lot of cities won't allow you to, you can't just build strictly parking. Like if you said, hey, I've got this vacant grass lot and I want to turn it into a gravel parking lot. Most cities won't allow you to do it because they think parking is ugly. And most of the time it is, because over time, parking lot owners let their parking lots get potholes and the lamps go out. They're not safe and crime happens there. Same with parking garages. And so if you can buy a good asset that's in place, that's got upside, and you can buy it for buy it for a number that makes sense with the in place income or potential value add income, and hold it for the long term and know that it's going to be worth something more at a later date, whether it's 5, 10, 15, 20 years, as the other parking lots go away and get redeveloped. There's only so much land. You can't make it. You
yeah,
can't make more of that.
exactly.
So,
Yeah, yeah, and I think that dovetails in with the opportunity with mobile home parks too. If you
yep,
can identify those products that are always going to be needed, parking, affordable housing, things like that, and that they're not making more of generally.
yep.
Uh, there's not really anything for it to do but become more valuable.
That's
And
right.
so I think both of those are kind of that way. So awesome. Well, let's just really quickly, we talked about the market. Um, you know, Debt and the capital markets have shifted a lot. Can you touch really quickly on how has that affected your ability to go out and acquire assets? Has it made you have to underwrite things differently? You kind of touched on earlier, and you're not necessarily always competing with these people, but certain buyers have different debt, right?
Yeah,
They're just trying to put insurance company money to play, or they're
yeah,
just really just trying to have all of this money that's available, and they're just trying to get a couple percent return, right? Stay up with what normal inflation is. Well, we're smaller investors. We're looking at things a little bit differently. We're using different debt. We're using banks and things like that, and so that debt looks different, so it's hard to be competitive. So how have you
yeah.
been able to navigate that in this kind of market of debt that's just it's been challenging?
That's a great question. I mean, first and foremost, I don't have a crystal ball. We're not speculative buyers. And so I don't know when rates are going to start going on the downward trajectory. I mean, they just went up again. There'll probably be two more increases before the end of the year. So I don't know when that peak is, and I don't know when the trough is. I have no idea when or how long that's going to take to happen. And so, with that being said, for us, the underlying fundamentals have not changed as far as when we look at an asset. What does it have to do for us? I mean, what does it have to provide for us and our investors? It's we've got to have some way to arbitrage, what we're buying it for and the going in cap rate, or what we can turn that cap rate into in the short term, 12, 18, 24 months. And, just take a look at what debt we're about to put in place and, how does that play out? Can we make the deal pencil out or can we not? And I found that it has been quite a bit more challenging. A lot of seller expectations haven't really changed as much. I think they're starting to. I'm starting to see some price expectations trend downward a little bit, or lower than maybe what they were 6 months ago. But even then, I think a lot of folks, and I get it, are kind of stuck in their mind of what they maybe could have got back in 2021 for their property when rates were
Hmm.
half of what they are today, if not more. And so again, I
Absolutely.
think just going
Yeah.
back to the point of like the fundamentals have never changed for us. They will not change for us. And so if we can't get a deal to pencil out, we're not going to hope and wish and pray on a star that in year 3 of the pro forma that rates are going to go back down. We can refinance, do a cash out, and rates are going to be 5%, and we're going to be able to get a 70% loan and give 70% of the capital back to our investors. Like that's not how we roll. And so if we can't look at the
Right.
worst case scenario and put that stress test in place with where the rates are today and assume they might not come back down that much in the next 3 years, does that work for us or does it not? And if what price does it work at, that's our offer. And if we lose it, we lose it. And if it's meant to be, it'll circle back around. So we just bought
Yeah.
a parking garage in downtown Phoenix, Arizona, about 2.5 months ago. We started working that deal last July of 2022, and we made our offer back then was again, world was very different. Oh, actually, we started working at like May of last year. July is when the capital markets started getting a little funky, but our offer was it was like $27.8 million for this asset. Phenomenal asset, best location downtown Phoenix, and we got beat out. We made the final best, and we got beat out, and hadn't heard anything else about it. October came around. The buyer couldn't execute. The markets had changed even more. He had capital calls of some other deals. Long story short, he couldn't execute. He couldn't buy. The owner of it was an institutional owner. They had a debt maturity coming up, like a lot are happening right now. They had
Hmm.
their backs
Yep.
against the wall. Their fund had already sunset that they owned this in, and they needed to unload it. And so, long story short, we didn't close on it until I think it was May of this year. So I mean, we started back at it in October of last year. Again, 27.8 million, I think is what our offer was. When it was all said and done, when we finally closed on this, we bought it for, after all seller credits and all that, like a net purchase price of $15.4 million.
Wow. What a huge difference.
Yeah,
What a
yeah.
huge. And so that's the flip side of this whole thing. Again, there's a flip side to all of these, right? The flip side to your, going through everything in 2008, and losing everything is look what you're doing now, right? The flip side to, um, some challenging capital markets, right now is that there are people that, and you don't want to take advantage of someone, but the bottom line is that they put themselves in a spot probably with, if you have bridge debt or you have, commercial loans work differently, right? There's people that have, rates that have adjusted or that
Mm-hmm.
loans that are coming due and they have to sell. And so you're providing a solution to them. They're going to have to sell. So that's an opportunity that is being created by kind of the volatility in the market.
Yep, exactly. And so again, back to the case in point of like just if we'd have, honestly, where the rates were back when we started that deal last year, if we could have closed on it in a reasonable time frame before the capital markets went haywire, then we could have still made sense of it. I mean, because the
Right.
debt we put
At,
on it this
at
time
another
around.
$12 million or something like that, right?
Yeah, I mean, because the debt we have on it now, literally, it's I think our rate's 8%, 25. I mean, like it's nowhere near as attractive, much
Right.
lower
Yeah.
LTV as it would have been more than half, rate wise at least, in much better terms
Yeah.
overall last year, and we still could have it would have penciled out for us. So anyway, just the fundamentals haven't changed. I would say that if you be true to yourself when you're underwriting something, you like make sure that it works for you and your investors. And other than that, it does, like, forget about it. Like, you put your best foot forward, and if that best foot doesn't work, move on to the next one, because there will be another one that comes your way that makes sense. And if the one that you missed out on was meant to be, then it will circle back around. It's
Yep.
and I
Yep.
think that's, and it's
Absolutely.
importance of also making a lot of offers. Literally, try to make as many offers as possible, not just for the sake of the exercise of making offers, but on assets that you truly would love to own or would like to own. Make offers, because the more offers you make, the better chance that you have of one of those actually either getting accepted, or if it doesn't, of it coming back around another time.
Absolutely. Yep. Yep. It could always come back around. And I think also, really honing in, like knowing your criteria and what it is you're looking for is key to being able to stay true to that, right? And not waver just
That's right.
because the market is doing something. So you're protecting yourself by doing that. But it also allows you to pass or play a lot quicker and not spend a lot of time on something that's not going to work. So
That's right.
Just really honing in on what it is you're looking for is important. So, well, great. I don't want to spend a lot of time on it because I've already given you, you've already given us so much of your time, which I appreciate. You do have a podcast of your own, that the Real Estate Investing Cash Flow podcast, right? And then you also have a book that I think just came out. Why don't you just real quick touch on those so people can, you're putting your knowledge out there, which is awesome, and
Yeah.
appreciate. So talk about those really quick so people can get those resources.
Yeah, so my primary podcast is called Real Estate Investing for Cash Flow. Been doing it now for 10 years, which is crazy to think, but it's been out there for 10 years now, and it's a commercial real estate investing podcast. I'd say it's probably the first commercial real estate investing podcast. Now, there's many other ones out there, but we hit on, I interview folks, and we hit on many different asset classes. I bring on experts and operators that specialize in different niches, mobile home parks, multifamily, self-storage, office retail, industrial, what have you. So hundreds of episodes out there that you can go track down and listen to. And then, as far as the book, I released the book about a year ago. And so it's the one that you see behind me. It's called The Cash Flow Investor here. And really it's a compilation of both lessons learned throughout my own career. Again, been doing this 20 plus years, went through a pretty severe cycle in 2008. I've owned just about every different type of asset class there is. I've had many mentors over the years. And so lots of lessons there that I share in the book. But then on top of that, of the hundreds of interviews that I've done since the 10 years I've been doing the podcast, I've met some just absolutely incredibly impressive, sophisticated folks that I've interviewed over the years, and I've gleaned golden nuggets along the way that we've implemented into our very own business. And so I share a lot of those in that book as well. And again, it's just kind of a culmination of everything that I've learned put into the book. I also go into some detail with my favorite commercial asset classes, mobile home park and parking are two of them, but there's a couple other ones in there as well that we didn't even talk about here today. So, and Ben, I'd love to give a free copy if you don't. I got a landing page that they can go to. You just have to pay for shipping. I think it's like $6.99 or something like that, but you can get a free physical copy of it if you go to kevinbupp.com/free book. And again, you'll get a free physical copy sent right to your home address. And I hope you enjoy the read.
Awesome. Hey, I appreciate that. I'm going to be, as soon as we're done here, I'm going to jump on and do that myself so I can dive into that. I appreciate you offering that, and I'll make sure that we include that link in everything that we put out there too.
Awesome.
So awesome. Well, before we let you go, if people want to, because you're obviously you're looking at deals, you also obviously need to fund those deals. So you do have potential investment opportunities. So anybody that would like to connect with you about investment opportunities or find more out about what you're doing in your business, what's the best way for them to do that?
Yeah, the best place to go is investwithsunrise.com. Again, that's investwithsunrise.com, and they can see the current investment opportunities we have, any future ones that are coming down the pike, get links to my podcast, and just everything else that we have happening within our business, but then also a lot of other resources as well there on that page.
Awesome. Well, Kevin, thanks again for being on the show. Really appreciate you sharing about your journey and about some pretty cool different asset classes that are out there. You definitely got my mind spinning on a couple of these things. So it's exciting. It's cool. There's opportunity out there. And again, I appreciate you being on the show.
Oh, thanks for having me, Ben. It's been a lot of fun. I appreciate you putting on the show. I know how much hard work it is doing these podcasts, so I appreciate all
Yes,
you do.
yeah, yes, it is. But yeah, we appreciate you putting it out there too. It's great to be able to share from experience and help other people, get out there and make some things happen. So thanks again for being on the show.
All right, take care, Ben.